are talking about in this video is how you can turn dirt into dollars and how you can build your way to profit. What the strategy really involves is how you can take a blank block of land, add a new dwelling to it of various descriptions, which you can then add to your portfolio and then rent out and begin creating profit from. Now, there are four main ways that you'll apply this strategy throughout your investing career. The first of which is probably the most common type of property in the Australian marketplace, which is a house and land strategy, where we're taking a blank block of land and building a standard 3 or 4 bedroom house on it. Now, the great thing about this strategy is, as I said, it's the most in-demand product in the entire country, and more families want to live in this type of property than almost anything else, which can be a great driver towards growth. So, for those people that are looking to apply this strategy in their portfolio, it's really for those who want to add a stock standard piece of real estate into their portfolio, which is going to be constantly in demand by a very strong demographic being families, which can then you can apply in the portfolio and grow in value to be able to create equity. And then what you can do with that equity is pull that equity back out and allowing you to leapfrog into next deal after next deal after next deal. So that's the house and land strategy. Now in future videos, I'm going to go into detail how you can apply this strategy and the things you need to be careful of to make sure that this deal is the right one in your portfolio and creates the profits that you need to serve the purpose in your portfolio. The second strategy is what we call a dual income strategy. Now, who this really suits is for investors who are looking to create an extra level of income, extra level of rental yield in their portfolio so they can increase their serviceability, increase the cash flow of their portfolio, allowing them to continue getting lending from banks. Now, a typical way that you would do this when it comes to a construction strategy is that we would again get a spare block of land, and what we'll do is that we'll build 2 dwellings. Okay, which might be 2 individual 3-bedroom adjoined properties, but it's all on the one title. And what that really means, all on one title, is that you can only buy these 2 properties or build these 2 properties, or if you wanted to sell them, that you could only sell them as these 2 properties on the one title at a time. The great thing about this strategy is that you can rent these properties out under separate tenancy agreements, creating increased rental yield so it can support the serviceability and cash flow in your portfolio. But again, the thing you've got to remember here is that you cannot buy and sell these as individual properties. They are all in the one title and must be bought and sold as such. The third way you can apply this strategy is like a duplex strategy. What a duplex strategy is, it looks very, very similar to the dual income, but the land itself can be subdivided, and so you ultimately wind up with 2 separate titles with 2 separate dwellings on. The great thing about that, first and foremost, is because you are adding an extra dwelling onto there under 2 separate titles, you can potentially create a great amount of profit on the way into the deal. And it also gives you a lot of flexibility. So that means that if you wanted to keep both properties in your portfolio, you can. If you wanted to sell one of those properties and to create a chunk of profit and a cash profit and potentially use that to pay down the debt on the other one you still hold, you can do that as well. Or you could use them both as trading strategies, or what we call the momentum strategies, where you're buying a property, creating an equity result out of it, and then trading them back to the marketplace to turn over chunks of cash and use those chunks of cash to deleverage your portfolio or to pay down your own debt, or whether it be on your own home or your other properties that you want to hold in your portfolio forever and a day. So that's your duplex strategy. Again, we're primarily using this so that we can create bigger chunks of equity in the portfolio and also add more value because we're creating greater density on that same single block of land and creating an extra title, which again adds more value to the overall property itself. The final strategy in how you can apply this is more of a mini development type of strategy. Now, this is as you become a little bit more advanced investor. And again, what we are focusing on when it comes to a mini development strategy is all primarily around equity creation. So, this is when we get a blank block of land, but instead of putting 2 dwellings on that, we might find a block of land where the council allows us to put more than 2 on there. Now, generally, we only want to stay between maybe 3 to 5 properties, 3 to 5 dwellings on the one title. So, for example, this is where we might go and build a 4-pack of units or a 4-pack of townhouses on the one block of land. Each of them on their own title, so once again they could be bought and sold as individual properties, whether they be townhouses or units. Now, we generally don't want to go over 5 properties on the one block of land. And the reason for that is that as we stay in between that 1 to 5 property range as we're developing and building, it allows us to stay in standard residential lending, meaning that we can potentially go up to a maximum of 90% loan to value ratio. As soon as we go over that 5 mark, or even some lenders 4 properties that we are constructing and building, we move straight away into commercial lending. So what that means is that our loan to value ratios tend to drop down to around 60 to 70%, and also our interest rates tend to be higher. And as we go up those levels in more and more properties that we are trying to build and construct in the one time, a lot more complication comes into it. And then we get into more medium density constructing and developing. So when we want to stay in that mini developer type of range, it allows us to create profits well over that 15% range. And usually the range we want to be looking at is around that 20% return on investment, return on the cash, on the total cost of what we're putting into the deal itself. That's where we're starting to talk about some bigger type of profits, some bigger chunks of equity, and also allows us to create a bigger yield on each property because we're constructing multiple dwellings. Now again, I must stress this is for more advanced investors, and you want to stage this in your property investment journey. For example, Sanders, who is one of my students I've been working with for a number of years, when I met Sanders, so he didn't have any, he will tell you himself, he didn't have any knowledge around property investing at all, and he was just getting started, and he only had his own home. When he first started, the very first deal that he did was a pure buy and hold strategy of an existing property. His next property was because he knew he wanted to get started in constructing and creating wealth through adding so much value to a blank block of land, which is one of the reasons we absolutely love constructing and building for profit and turning dirt into dollars. So his next property was a house and land strategy where he constructed a 4-bedroom house on a blank block of land in Western Sydney in a new land estate, a new land subdivision. He then moved on to do a duplex strategy and then moved on to doing construction and mini development type of strategies. His most recent development is in the Brisbane area, where he's focusing on developing somewhere between 4 to 6 properties on that one block of land. And so over the last kind of 5 to 6 odd years, he's progressed his portfolio as his own education has grown, his level of equity in his portfolio has grown as well. So giving you a little bit of a metaphor how to really understand this very, very effectively. When you're thinking about a farmer, you've got to ask yourself, they farm on a farm, they've got a lot of land there, right? So what you want to be asking yourself is, what is more valuable to a farmer? Is it just a spare paddock with absolutely nothing on it? Or is it a paddock which they've actually cultivated and they've been able to plant seeds in where they have the potential to grow crops and add value to that land and that blank block of land because they can create a harvest, a yield out of it later on? And the obvious answer is that it's going to be the paddock where they've been able to actually plant some seeds in there and grow a crop where they can harvest a yield later on. So the construction strategy, the building way to profit strategy, is a core strategy that you may want to introduce into your portfolio sooner rather than later. And the reason we love this type of strategy is that you can apply it in so many different ways, whether it be in your buy and gold strategy for those buy and hold properties you want to hold in your portfolio forever or a day, which ultimately you want to own outright and create your passive stream of income coming out of it. Or it might be from your paycheck strategy, so you can create a rental yield out of it, an increased rental yield, so you can increase your serviceability and increase the cash flow of your portfolio so you can keep getting more and more lending year after year. Or finally, whether it be from your momentum strategy, where you're buying a property, getting a result out of it over a 3, 4, 5 year period, depending on your strategy, and then the whole purpose of it is to trade it back to the marketplace, turn over a chunk of cash, and then use that chunk of cash to deleverage your portfolio, invest in future real estate at lower loan to value ratios, or to rapidly eliminate debt, whether it be on your own home or those properties you want to buy and hold forever and a day. So again, in future videos, I'm going to share with you in a lot more detail the actual process of how you go about doing this so you can understand how you can turn dirt into dollars in your portfolio.